What if I told you that you could buy a brand new construction house and the interest rate will be half of what you're going to get from your bank? Hey there, and welcome back to Bald Prairie Real Estate. My name is Matthew Pfeifer, real estate agent in Regina, Saskatchewan. That's my trusted assistant, 𝗵𝗲𝗍. This is the weekly news recap where I go through what I think are the most interesting Canadian real estate related news topics and give you my thoughts and opinions on that. But before, I did want to say that I had a viewer come up to me while I was on vacation at the airport and introduce themselves, and you have no idea how much that means to me. I think it's super cool. Also had a buyer that I sat down with just a couple of days ago. Same thing, they'd seen me in a movie theater a few years ago. They didn't want to come up and bother me. Please come up and say hi, introduce yourselves. You have no idea how much that means to me. So if I see you in public or you see me, please come up and say hi. And let's start this off with another terrible bad dad joke. What do you call it when a group of apes get together and start a company? Monkey business. If you have a terrible joke I can use in the future, put it in the comments below. Let's get into this week's Canadian real estate news. This is an interesting article out of the National Post talking about what can you do in terms of renovations when you own a condo. Of course, each condo is going to be completely different, so check your applicable condo documents so that you know exactly what you can and can't do, and very often you're going to have to get them approved by the condo board before you can do any types of renovations. What you own is going to differ by each condo. Generally, paint in, flooring up. So you can change the flooring, you can change the paint, but you can't do things like changing electrical, plumbing, etc. And that's why it's very important when you're purchasing a condo to know exactly what you own and what you don't. When you're purchasing the condo, they're going to give you a set of documents. And one thing that's going to be in there is what you own, what types of changes you can make, what is going to need condo board approval, things like front and back doors, your decks, your balconies, even some landscaping. If you want a townhouse type condo, that may not be something you can make any changes to. So before you think about doing any renovations or before you purchase a condo, know exactly what types of renovations you can do, or you could be in for a whole lot of trouble and financial pain. Real quick pause here. If you're thinking about buying a house in Regina, obviously I'd love to help you out, but if you're somewhere else in Canada, don't worry, I can get you set up with a perfect real estate agent that'll handpick for you. If you check out the description of this video, you're gonna see a link to my calendar where you can book me in for an agent recommendation consultation. I'll give you a call, learn about what's important to you in a house, in a real estate agent, and I'll get you set up with that perfect agent in your market. And now let's get back to the video. Next, let's talk about how high mortgage arrears are going to go. This article is from the Bank of Montreal, and they're talking about where they think mortgage arrears are going to end. Mortgage arrears are obviously a very important metric to follow because that will be the leading indicator for foreclosures. I've talked about it lots on this channel. They're still really, really low. As of today, this information just came out from the Canadian Bankers Association just before I started to sit down and record this. It's at 0.19%. That is well below pre-pandemic levels, well below the historical average of 0.38%, and almost nothing in comparison to the 1980s high of 1%. So we're still well below any of the more recent highs and the long-term average. This data does end at the end of May. That's just how long the lag time is for the Canadian Bankers Association to get the information out. So I expect as of today, August 2nd, that I'm recording this, that it's probably higher than that 0.19%, but a long ways to go before we get there. And if you look at, for example, in the United States, they are seeing even today, their mortgage arrears rates significantly higher than ours, and they historically have been higher than ours in Canada. Bank of Montreal is thinking that we're probably going to get back to about that long-term average, potentially not even getting there though. So we are going to see mortgage arrears continue to increase, but at least from the Bank of Montreal's perspective, they don't think we're getting anywhere near historical highs and maybe not even getting to the long-term average.
Come on, really?
Now let's talk about the lowest available mortgage rates. This was a topic I did last week. I asked you guys if you wanted me to continue to do this, and it was a resounding yes. So I'm going to continue to give you each and every week the best available mortgage rates that I can find. Now, I think the reports or the numbers I'm going to give you today are going to be quite a bit higher than what you're going to see next week, at least what's been happening with the bond market. That's been dropping quite a bit. So I expect these numbers will change quite a bit when we're talking next week. But let's go to the insured first. The best 5-year fixed I could find, again, through Citadel, 4.44, but remember Citadel doesn't operate in all provinces. The best available national I could find, 4.54, available through MCAP. The best 10-year was First National at 5.8. The best variable I could find through CMLS was 5.65%. When we go to uninsured mortgages, the best 5-year, again through Citadel, 4.99. First National again had the best 10-year at 5.8, and the best variable was through Citadel at 6.24. Well, a couple of viewers asked for the big five banks. So here's the best. These are the 5-year insured through the big five banks, the best available. CIBC 4.84, Bank of Montreal 4.96, RBC 5.04, TD 5.15, and Scotiabank at 6.79. Don't take that mortgage. That is terrible compared to what else is out there. So I'll keep updating you each and every single week with the best mortgage rates available. And speaking of mortgages, let's talk about the now available 30-year amortizations. This is just available starting here in August. That was a plan announced by the federal government in order to make housing more affordable. It's part of their housing strategy. So now as a first-time homebuyer buying new construction with an insured mortgage, you can now go, instead of a 25-year amortization, you can extend it out to a 30-year amortization. The government's touting this as an affordability measure. Yes, it does drop your monthly payments by about 5 to 8%, but it increases your total interest cost by about 20 to 25%. So a small monthly drop in your payment, a massive increase in the amount of interest you're going to pay long term. I really don't like this. I think this is just a band-aid solution at best, and a very expensive one at that. I've said over and over again, and maybe this is just a personal thing, I think you should be trying to pay off your primary residence as quickly as possible, because obviously the longer you're paying it for, the more interest you're going to continue to accrue. And if you can pay it off faster, it gives you a lot of flexibility. But even still, this is going to be hard for the vast majority of Canadians to even access this program to begin with. You've only got about 17% of all mortgages in Canada that are insured from the very beginning, so that's actually a pretty small piece of the pie. But even if you think about it, the cost to build a single family home, I'm just using some rough numbers from my province here in Saskatchewan, probably $300 to $350 a square foot just for the cost of building it. And then you're going to need a lot to put that on. That, again, here in Saskatchewan, probably $150,000 potentially up from there. So right off the bat, you're over $400,000, $450,000 for a relatively basic single family home. And that's going to be no fence, no yard, no driveway potentially, none of that stuff, no finished basement. That's a pretty basic house for nearly $500,000. And again, that's in Saskatchewan, where I think your costs are probably a little bit cheaper than the rest of the country. This article is out of Financial Post, and it is a builder offering mortgages that are basically 50% off of the current rates. When new construction slows down, builders often get pretty creative. We saw here in Saskatchewan, builders were offering at one point free cars if you bought a house with them. That program was shut down real fast by CMHC. And this is a builder offering mortgages that are half of what you could get today at 2.34%. So there, of course, there's got to be a catch, right? And there is. The purchase price has to be under $1 million, and this builder does a lot of homes that are over $1 million. So that, of course, is going to limit the number of homes you can even choose from to begin with. And as we talked about earlier, the cost of new construction is pretty high, and it's going to be tough to even keep an under $1 million for many home builders. This is only a 3-year mortgage, so it's a short-term solution, and it doesn't allow you to qualify for the mortgage because lower interest rate, because of the stress test. I guess it kind of would a little bit. For those that don't know, the stress test is right now a 5.25%. You have to qualify at 2% higher than your quota rate, or 5.25%. So with these interest rates, in the high fours, low fives, you'd be qualifying on 7. So you would qualify potentially for this because you're qualifying at 5.25%. It's an interesting and creative way that the builders are trying to lure home buyers that are sitting on the fence, off the fence, in the showroom, and eventually hoping they will purchase one of their homes. The builder had said, though, that as of now, nobody has taken them up on this offer yet. So as of right now, it doesn't seem anybody's willing to bite, but I do think it's an interesting solution. Let me know what you guys think in the comments. Would you, go out and buy a brand new house with this short-term, but also very cheap mortgage? Or are you gonna say, no, I'm not interested at all? That's a wrap for this week. Here's what the YouTube algorithm says you need to watch next here on Bald Prairie Real Estate. Please give this video a like if you loved it. Hit me up in the comments section below. I love chatting with you guys there. And as always, thanks very much for watching.